All right, let's talk fiscal policy. And I know what you might be thinking: dry, academic, boring. But forget all that. Today, we're not treating this like a textbook. We're treating it like a strategic playbook, a guide from the C-suite on how to manage an entire national economy. And for anyone who's serious about business, listen up, because understanding this playbook is absolutely essential. It shapes the entire world you're about to operate in. So, here's what's on deck. First, we'll define the game plan. What's the actual mission? Then we'll break down the three main levers the government can pull. After that, we'll get into strategy, playing offense versus playing defense. We'll make it all real with a deep dive into India's playbook. And finally, we'll do a performance review and score the results. Let's jump in.
First up, the game plan. You know, every successful company has a mission statement, right? Well, a country's economy is no different. We have to ask, what is the government, as the executive board of the entire nation, actually trying to accomplish?
And this is the big question, the one that sits at the very heart of fiscal policy. This is the North Star. Every tax law, every spending decision, it all points back to this. You can think of it as the ultimate value proposition, not just for shareholders, but for every single citizen in the country. Okay, so that big mission breaks down into these four core KPIs. Let's translate this into business terms. First, full employment. What does that really mean for your company? It means you have a deep, stable talent pool. You can find the engineers and the marketers you need to scale without getting into a crazy bidding war for talent. Second, price stability. This is absolutely crucial for any long-term planning. I mean, imagine trying to build a 5-year forecast when you have no idea what your raw materials will cost next year. Unstable prices are a CFO's nightmare. Third, stable economic growth. This is all about predictability. As a strategist, you need the confidence to invest millions in a new factory, knowing that in 3 years there will be customers with money in their pockets ready to buy your product. And last, optimum allocation of resources. This sounds academic, but think of it as the economy's supply chain. The goal is to make sure that capital and labor are flowing to the most productive parts of the economy, not getting stuck in zombie companies or wasted. It's all about maximizing the entire system's return on investment. So now we know the mission. The next question is, how do we actually get it done? Well, this is where the toolkit comes in. Think of these as the three main levers that the government's leadership team can pull to steer this giant economic ship. And here they are: taxation, public spending, and the budget. Now, the key thing to remember is that these don't exist in a vacuum. They are totally interconnected. You pull one lever and the other two move. It's a delicate dance. And for any business leader, the moves they make with these levers will hit your P&L, guaranteed.
Let's dig into that first lever, taxation. So, as a business leader, you're basically dealing with two big buckets. On one side, you've got direct taxes. That's your corporate income tax, a line item that comes right off your profits. It directly impacts how much cash you have left for R&D, for expansion, for shareholder dividends. On the other side is indirect tax, like a goods and services tax. This gets tacked onto the final price of your product, and this creates a huge strategic dilemma for you, right? Do you eat the cost of the tax, which hurts your margins, or do you pass it on to the customer and risk them choosing a cheaper competitor? A 1% change in the GST can force every company in the country to rethink its entire pricing strategy.
All right, lever number 2, public spending. Now, it's easy to just think of this as social programs, but from a business perspective, it's so much more. This is a massive economic engine. For example, if the government decides to pour billions into building new airports and highways, well, your company's logistics costs just went down. Your supply chain just got way more efficient. Or say they fund a ton of public research into AI. Suddenly, the talent pool of data scientists you can hire from expands dramatically. The government isn't just a regulator, it's a massive customer and a market maker, and its spending directly creates demand.
And this brings us to the third lever, the budget, which is really where it all comes together. Think of it as the annual P&L statement for the entire country. A balanced budget, that's your company breaking even. A surplus budget, that's pure profit. You can pay down debt or build up a war chest for a rainy day. But the most interesting one and the most controversial is the deficit budget. In the news, you hear it called overspending. But you know what you'd call it in a boardroom? Leveraging your balance sheet. It's the exact same thing as a company issuing bonds to finance a huge growth project, like a new factory or a major acquisition. It's a bet that the future economic growth from that investment will far outweigh the cost of borrowing the money. Of course, just like a highly leveraged company, it's a massive risk. If that growth doesn't come, you're just left with a mountain of debt. Okay, so we've got our mission, we've got our tools. Now let's talk about the playbook itself. Just like a company pivots its strategy based on whether the market is booming or busting, a government has two basic modes: offense to kickstart growth and defense to cool things down.
And this slide really breaks it down. Let's do a little role play here. Imagine you're the head of marketing and the economy is in the tank. The government goes on offense, an expansionary policy. They cut corporate taxes, so your CFO frees up a little more budget for you. Even better, they cut personal taxes, so your target customer now has an extra $100 a month. Your entire job becomes, how do I capture that cash before my competitor does? Now let's flip it. The economy is running red hot, and inflation is a problem. The government plays defense, a contractionary policy. Taxes go up. That extra $100 vanishes from your customer's wallet. All of a sudden, your premium product seems like an unaffordable luxury. You have to pivot your entire messaging to be about value for money. See, these policies aren't just abstract ideas. They directly impact your budget, your sales targets, and your entire go-to-market strategy.
All right, enough with the theory. We all know that a strategy deck is one thing, but execution is everything. So let's move from the playbook to the actual playing field. We're going to dive into a case study of India's fiscal framework to see how all this works in one of the most complex, dynamic, and fastest-growing economies on the planet.
So, what makes India's approach so interesting? Well, you've got these key features. First off, the federal structure. For any multinational, this is huge. It's not one market, it's many. It's like operating in the European Union. You've got the overarching federal rules, but then each state, Maharashtra, Tamil Nadu, Uttar Pradesh, has its own tax incentives, its own labor laws, its own priorities. Your market entry plan has to be tailored state by state. Then you have Niti Aayog, which is kind of like the government's internal strategic consulting group, advising on the long-term vision. As a business leader, you'd be reading their reports religiously to see where the policy winds are blowing. And finally, the tax system itself is a mix of central and state taxes. For your finance team, this means dealing with a layer of complexity you might not find elsewhere. Look, mastering this isn't optional. It's the price of admission to operate in this massive high-growth market.
So, the big question, how is the playbook working out? Does the strategy actually deliver? No plan is ever perfect. Every strategy has its wins and its trade-offs. So let's pull out the balanced scorecard and do a proper performance review.
Okay, let's break down the scoreboard. In the win column, you've got some heavy hitters. Capital formation is up. That means more roads, more ports, more factories, the fundamental building blocks for business. Export promotion is working, helping Indian firms compete globally. These are huge, tangible victories. But look at the other column. Every win seems to have a corresponding trade-off. That same government spending that builds capital can also spark inflationary pressures. The tax structure has incentives, but it's also seen as defective and complex, which adds costs for businesses. And then you see the most fascinating paradox on this whole slide. Look closely. Reduction of inequality is listed as a win, but persistent inequality is listed as a shortcoming. How can that be? Well, it's a classic strategic challenge. The government might have programs to lift people out of poverty, but at the same time, other policies, like tax breaks that favor corporations and investors, might be widening the overall gap between the rich and the poor. It is the ultimate strategic tightrope walk.
And in the end, it really does all come back to this. Everything we've talked about, the tools, the strategies, offense, defense, the tough trade-offs, it's all part of this constant, delicate balancing act. You're using taxes and spending to try and hit that perfect sweet spot, pushing hard for growth while also keeping the lid on the destabilizing force of inflation.
So I want to leave you with this one final thought, a strategic question to chew on. We've talked about the two big levers, taxation and public spending. Think about it. Taxation is like a scalpel. It's surgical. It can precisely change the incentives for every single person and company. Public spending, on the other hand, is like a force of nature. It can reshape the physical landscape, build entire industries, and define the social fabric. So, as a future leader who will have to navigate this world, which of those two do you think is the more powerful tool for shaping society? There's no easy answer, but understanding that debate, that's the mark of a true strategist.